Stocks shocked us in September and October of 2024. We thought history and seasonal patterns would tell us that September and October would be terrible months for stocks. That did not turn out the case. It turns out that you should only rely on history if history is highly similar to the time you're living in. And history is not similar to any time we're living in right now, because this is a time unlike any other. Trying to make historical comparisons in 2024 has not worked out very well. When you're comparing to previous times in history, the first thing you need to ask is, does the current period in time resemble previous history? I would argue that we're in a unique spot in history that does not resemble previous periods very well. First of all, there was the pandemic, and what we have now is a reaction to the pandemic. And to go back in history and try to find a previous event like this, you'd have to go back to 1919 when the telephone and radio were just kind of coming into use. And it is so vastly different from now that it bears little resemblance and is going to be in little help in your stock trading. So the pandemic was likely a 1 in 100 year event that is likely to reoccur. At least we hope it's unlikely to reoccur. The other factor is the technology that's coming on is so massive. Artificial intelligence. We've never seen anything like it before. I guess if you want to go back in history, you could go back to the caveman and go back to the development of human intelligence. And I guess you would go back to the invention of the wheel for the technology and the invention of human language for your language models, and compare that to the large language models of artificial intelligence, but it would make little or no sense. So the first question you got to ask yourself, is this period in history like any other period in history? And I would say there's some similarities, but they're few and far between. The other stuff, the wars, the catastrophes that are happening are just background noise. It's happened all the time through human history, and it's going to be of little help to you in the current period, since we have these two unique factors, the reaction to the pandemic and artificial intelligence, that just skew this whole event and make it very different and put the emphasis on technology, which is what I invest in. Some of the proof that 2024 is indeed different is the so-called seasonality. You know, we just expect the market to go down each September and October, and it just has not happened this year because of artificial intelligence largely, and because the Fed has been successful in lowering interest rates. It's uncertain how much further they're going to lower them, but at least they're not going to raise them, and it's probably going to be steady for a while, and eventually it will go down. But so far, September and October in 2024 has been outstanding, with an emphasis on technology. And the leader, of course, has been NVIDIA, the king of artificial intelligence. And looking at the one-year chart, NVIDIA has just been an outstanding investment. And that leads to another one of my rules, is that you're usually had to own the dominant stock in the stock market, especially when it's rallying. It used to be Apple, and then it was Tesla, and now it's NVIDIA. And in the last year, as you can see from the chart, it's gone up 208%. With a relative strength of 70, which is good and which is outstanding. I invest in the SPY, and if you had bought it a year ago and just held it, you would have made 38%, which is really outstanding. And its relative strength is 64. It's the number one ETF that Warren Buffett would recommend. So it's constantly cycling in the better companies and cycling out the companies that have fallen behind. So it kind of takes care of your trading for you in many ways if you don't have time to devote to individual trading of stocks. And then amazingly, Warren Buffett's stock, Berkshire Hathaway, I trade the BRKB shares because the BRKA shares are hundreds of thousands of dollars. They're like $500,000 a piece. So you have to do the BRKB shares usually. And amazingly, it's made 38%, which is exactly what the SPY has made. So the stock he recommends, he's performed exactly the same. And this is with around 45% of Berkshire Hathaway being in cash right now. Its relative strength is 58, but Warren isn't taking any chances. He's probably too conservative for the times. Probably when he passes on, that it should be taken over by someone with a similar bent as Warren, but perhaps a little more prone to buy technology, conservative technology. I'm a longer-term investor in Insight Enterprises, symbol NSIT, and looking at the one-year chart, you can see it's made over 53% in the last year, and it has a relative strength of 58, which is okay. And this is a stock I don't worry about that much and just plan to hold it for the long term because I believe in the stock. I'm following Peter Lynch's advice to buy stocks that I know and that I actually use, and that would be Amazon, the amazing Amazon. I get deliveries at least once or twice a week from Amazon, so I'm one of their devoted customers, of which there are many. And it's gone up 51% in the last year, and its relative strength is 57, which is good. And it's interesting that Amazon, I didn't realize fully that it was also, I think of it as a technology stock, but it's also a member of the Dow Jones and Industrial stocks, the 35 stocks that make up the Dow Jones Industrial Average. So it's very important to our economy. Taiwan Semiconductor is the company in Taiwan that makes 80 to 90% of the semiconductors in the world. So it's a big deal. Its symbol is TSM, and it's made 121% in the last year. It has a relative strength of 67, which is good. I plan to hold this company as long as China doesn't threaten to invade it too much. The stocks that I've reviewed so far are long-term stocks that I have over $100,000 in, and I think they have good futures, and I'm hanging with them. Taiwan Semiconductor more or less saved artificial intelligence after the ASML disaster, where they indicated that their revenues from China had decreased significantly. So a lot of those have to do with artificial intelligence. The next batch also has some artificial intelligence stocks in it. And this next group of stocks, I have anywhere from $50,000 to $100,000 in them. So I'm less committed to them and would trade them if I get too much negative news. But I'm favorably disposed to them. I just have them on probation to some extent. My next stock is in that group. I have about $80,000 in Oracle. ORCL is the symbol. And it's made 70% in the last year, and its relative strength is 62, which is okay. And I don't know why I don't believe in it enough to buy 1,000 shares. I think this is one that if I'm going to add, this is going to be the one I add, simply because it is such a good performer. and it's so needed by the artificial intelligence. And it uses so many of NVIDIA's chips. It buys as many as it possibly can get its hands on, and they are benefiting from it. So it stands to reason that this stock is going to continue to go up, and I just need to convince myself to buy the other 500 shares. The next stock is just the opposite of Oracle. I love the stock Google, symbol GOOGL, which can also be called Alphabet. And it's gone up 21% in the last year, but it's had a rocky time lately, because the Department of Justice has been threatening to break it up, although it will take them some time to accomplish this dastardly deed. And its relative strength is only 52. My thought about this stock is I have, again, about 80,000 in it. I should probably sell it until things look more favorable. I think that Department of Justice hangs over it like a sword, and I think it's not going to do that well for now, although I believe in this company long term if they don't break it up. Dell is an interesting one. It's a computer maker, equipment maker, and its chart isn't exactly great. But I love the numbers. It has a price to earnings of only about 14, and its earnings growth rate is 19, which is 19%, which is good. And it has a relative strength of 59, which could be better. But this is one that the chart isn't quite as good as I'd like, but the numbers are good, and I like the stock generally, so I'm going to hang on to it with my 60,000 or so of it. I have about $60,000 in Vertiv Holdings, symbol VRT, and it's made about 205% in the last year. But look at that rocky road. And that's why I have 60,000 rather than having the full 1,000 shares, which I like to buy. I keep it down just because it can jump up suddenly and jump down suddenly. And I'm waiting for it to have more of a steady course before I'm willing to put more money into it. But I think it is a good stock. Its relative strength is 68, which is good. And Vertiv Holdings will be reporting earnings on October 23rd, which is the same day that Tesla will be reporting earnings. So the 23rd is going to be a big day for technology stocks. I think Tesla is a good long-term investment, but in the short term, it seems not to be grabbing my attention that much. At least I'm not willing to invest in it right now until I hear some exciting news, more exciting than what I've been hearing. This next group of stocks is my experimental stocks. I have less than $50,000 in them, but some of them have already turned out to be good investments, and the other ones I'm still waiting to see what's going to happen with them. The first stock in this more speculative group is Palantir. I have about 42,000 in it. I bought 1,000 shares, obviously. It's made about 165% within the last year. It has kind of a checkered history in my mind. I've owned it in the past and then gave up on it. And then, but I continued watching it, and they literally forced me to buy it. Of its recent rise of 165% in the last year. So they literally forced me to buy it again as I was following it. And its relative strength for the last year has been 69%, which is decent. But it has a price to earnings around 100. And so I have just reservations about it because they dilute the shares by paying the employees with stock shares, which dilutes the value of the shares you own. But it is pure artificial intelligence, and they claim they can answer most any question about a given set of data. And they do a lot of work for the government, and they're starting to do more work for corporations, which is the real hope. So I'll say they forced me to buy it, and I'm an unhappy customer making money on it. So I will continue to hold it as long as they're making me money. Reddit is a social media stock that is known for talking about meme stocks in the stock market. And they have other interesting things that I find myself watching every now and then, not intentionally, but I seem to stumble across it. And so I'm interested into it simply because I'm not into social media that much, but I will watch things on Reddit. And I did own some like in May, but I got out of it sometime in July. Because it started going down, but it seemed to bottom in around August, and then it's been sort of a steady performer going up, and it's made 60% on the year. Its chart is good, but they don't really have earnings yet. This one is a long shot on the future. And so far, the long shot looks like a good shot, so I'm willing to stick with it. And I am interested, and I use it, and I like to buy stocks of things that I use, so I'm going to hang with it. I have about $35,000 of it right now. Robinhood, symbol HOOD, is the stock trading platform, and I know people that use Robinhood. I don't use it myself, but they seem to get a lot of value out of it, and it's done outstanding for the last year. It's gone up 195%, and so some time ago I noticed the movement going up, and I bought 1,000 shares as a longer shot, but I think it's pretty stable, and I like the product because the people that use it like it. Its relative strength is 71, which is good, and I plan to hang on to this one. NuScale Power Corporation, symbol SMR. Think of that as small modular reactor. It's actually small modular nuclear reactor. And data centers are looking for sources of energy, and they've decided that nuclear is probably a solution. These are small neighborhood types of energy producers from nuclear energy that are far safer. And so it's gone up significantly. It's gone up 398% in the last year. I started buying it around $8, and it's getting close to $19 now. So it's been a very good investment. I bought 1,000 shares just as a flyer, so to speak. And its relative strength is 75%, which is good. This last one is Red Robin Gourmet Burgers. RRGB is the symbol. And I bought this mainly because I just like the restaurant. I eat there all the time. It's kind of my average restaurant to eat at when I'm out and I need something to eat. So it's bottom fishing in many ways. It's actually gone down 15% in the last year, but it recently has started to go up. I bought it at about $5, and it's like at $6.50 now. So we will see what happens with it. I like the restaurant basically more than I like the stock, but we will see if this bottom fishing works out. There at least seems to be buyers now for Red Robin, as its relative strength is a strong 81.